Hello, everyone. This is my first video where I'll be breaking down a trade, and I'm excited to share the details of a EURUSD trade we took in the pro community today on the 7th of May, 2024. This trade presented a great opportunity, and I'll walk you through the analysis and decision-making process behind it. Let's dive into the specifics. Firstly, I always start by analyzing the 30-minute time frame and marking out the Asian high and low. After marking these levels, I wait for the market to either break above the Asian high or below the Asian low before considering where to enter the trade. In this case, the market broke below our Asian low. Next, we move to a lower time frame, typically 5 minutes, to look for a market structure shift. This shift confirms whether the market will continue in the same direction. In this instance, we were looking for a sign that the market would continue higher. Once we identify the market structure shift, we mark our point of interest, which is where we can confidently enter the trade. After the price reaches our point of interest, we enter the trade. Our stop loss should be placed at the lowest point that broke the Asian low, and we target either the Asian high or a risk-reward ratio of 1.2 or 1.3, as shown in the chart. Then, we let the market do its thing. As you can see, it was a beautiful trade with a risk-reward ratio of 128 caught, and it eventually reached a 1.3 risk-reward ratio. This is the approach I take every day when I trade, and I share it with my pro community subscribers. If you enjoyed this breakdown, please like and follow for more content like this.